TGO traders and investors, welcome to Tuesday's Market Sit Rep. Matt Buckley, call sign Whiz, the primary and weekly options model portfolio manager here at TGO, and an Italian playboy versus an Italian comedian. Sounds like a Italian soap opera, but no, it's the folks who are vying to run Italy. Market pulled back a little bit on that clown car. Also pulled back a little bit yesterday based on the fear of sequestration coming up on Friday. Non-event, folks. Sequestration compared to the Fiscal Cliff is going to be, a ripple in the ocean. Take a look at the SPX here, guys. Here's the Fiscal Cliff, which could have been a potential 3.5% to 4% hit to our GDP had it happened. That's what the market did. Here's what's going on with sequestration. You can copy this and paste it right up here. Same thing's going to happen. We're going to bottom out, guys. Sequestration is going to end. It's going to happen, but once it ends, once the market knows and uncertainty's gone, we're going to continue to rally. Guys, you can't beat the guy that's testifying in front of the Senate right now. You can't fight the Fed. The guy's pumping $85 billion a month into this market, and it's the market that won't die. It's like a vampire, man. You really have to hit this thing in the chest with a wooden stake, and even then, I don't think it's going to die. So, interesting week ahead of us. We've had some really good economic data so far today. The good news on housing. The S&P Case-Shiller came in pretty good, but look at this. New home sales, guys. Completely blew it out of the water. The Conference Board's number, consumer confidence, through the roof. Very good numbers. And the Richmond Fed, the Richmond Manufacturing Index, an 18-point swing from -12 to 6. Great news today. We had good news out of Macy's, some Home Depot news. So with yesterday's massive sell-off, we're seeing some really good stuff today. Now the market's wallowing around a little bit. Yeah, we're up, but we're waiting to digest what the Fed chief's saying. Okay, so that's why the market's kind of wallowing around a little bit, and gold's starting to catch a bid. The GLD's pulled out of its nosedive. It's found that support around 152, 153, and it's really caught a bid here. Wednesday, folks, we're going to see some durable goods. The Fed chief continues talking pending home sales, so more a look into the housing market. Thursday, obviously, weekly unemployment claims. Chicago PMI, and then Friday, big day in the market, guys. Really big day in the market on Friday. Personal spending, personal income, University of Michigan consumer sentiment, and also construction spending, ISM manufacturing, and some vehicle sales. So the rest of the week, we have some pretty significant economic events. We also have, we're going to really take a good look into what's going on with the retail sector. Macy's, Target, TJX, Limited, Gap, Kohl's, a lot of these retail companies are going to be reporting earnings as well. So again, I think we kind of shift around here. I'm market neutral on the SPX. If you take a look at the price action in the SPX for the past 20 trading days, you guys know that I believe 1,000-point round numbers here on either the Dow or the XPX are magnets. They tend to draw the market up to it and then act as a magnet pulling it back to the downside. And we're going to wallow around here this 1,500 level on the SPX for a while. We're going to see some pressure with sequestration later in the week. But again, guys, put your rally hats on because you can't fight this market, right? You cannot fight the Fed, and you can't fight this. I believe this is built on nothing. It's built on air, and one day it's going to end, and it's going to end badly. But until then, I'm going to trade the hell out of it and do some pretty good works. The VIX, Volatility Index, guys, came to life last week when the FOMC, when the Fed chief kind of scared us that he might kind of possibly be creeped out about what he's doing to the market and stop his asset purchases. And here we go. A nice 40%-ish jump in the VIX, 30%-ish jump in the VIX, and we're seeing that a little bit of a continuation of that. Yesterday there's Monday's sell-off, and then it's kind of hanging out here right now. But in our live trade brief I just did, we're going to put a bearish double vertical spread on the VIX. When vol's cheap, you buy it. And down here, my Top Gun options traders, I told them, I said, get ready for sequestration. The VIX under 13 is nuts. We're getting long volatility. Ended up being a great trade. Now we're going to get bearish on volatility, guys, because, again, volatility doesn't stay elevated forever. Volatility staying elevated forever is like me on a treadmill at a 10 incline at 10 miles per hour. It just ain't going to last. Look at the history of the VIX. Financial tsunami, world's going to end? No, it's not. Eurozone's going to fail and implode. No, it's not. We lose our AAA credit rating. The United States is going to fail and implode. We didn't. You can see what happens with volatility, guys. It spikes, and then it reverts back to its mean. Same thing's going to happen right now. So we're seeing a nice, healthy spike in the VIX, and I'm going to get ready to sell the hell out of it. Looking at selling, the 1921 bear call spread in March, and then buying, taking in a credit, and then buying probably the 1614 bear put spread. That's called a double vertical, a bearish double vertical, and it's an afterburner trade. It works for you. It's awesome. Works against you. It's going to hurt, but that's what we're looking at as volatility here. Okay, got to run. A lot going on here at Top Gun Options. Having a great time in our weekly option service, looking at nearly $9,000 in gains in the past 3 weeks, obviously averaging about $3,000 a week in profit. If you want to see how we're doing that, all you have to do is go to topgunoptions.com/weekly options, or you can hover over our services and select weekly options there and give it a test flight. Okay? All right, happy hunting. Make sure you hedge, and I'll be back with tomorrow's sit rep. We'll see you.